XRP has seen more volatility on the 1 hour, 1 day and 1 week timeframes, and we have seen a lot of pumps, dumps and liquidity being extracted from the market. In today's video, I'm going to be sharing my thoughts and opinions as to where I think the price action is heading next, considering all of the most recent movements for XRP. As I get into today's video, smash that like button if you're new, subscribe, and let's jump right down into the charts. So we're going to kick things off right here with XRP paired up with USDT. We're on the 1 hour Binance chart, and we were tracking the idea of coming down to the range of 58.74 to 58.99, and this was something that we were looking to see get hit and basically then start to see a bit of a run to the upside. However, on this 1 hour time frame, we actually saw invalidation before we completed this move. Okay, and what we meant by that is this move up here higher than that previous 59.9. As I was talking about yesterday, with the way that we would have approached this would have been to go short on the market, stop loss higher than that area because it would have broken the structure, and take profit down here. And what you actually saw was the market pump up, grab all that liquidity, and then dump all the way down to our targeted range. This is the importance of making sure that you use proper risk management and all that kind of stuff. But you can also see that the market, Bitcoin specifically, along with other cryptocurrencies, have been incredibly volatile, with a lot of money and a lot of liquidity being extracted from the market. And in the case of XRP here, it's been the same. Now, we do have to tidy this up just a little bit and actually reflect on what all of these price actions now mean, or the price action now means considering all these additional variables. Okay, now we can see here that we had this huge move to the downside, and then we've had a rally to the upside since our low last night at 1700 hours UTC. We've come up by 3% and have found resistance on that 200 hourly EMA. This is a problem because we can also see a death cross looming between the 50 SMA, the yellow line, and the 200 EMA, the white line. Okay, so again, we know that there's going to be a problem here in the future for XRP's price action. Expect rejection, and therefore we can potentially now think about this turning into a confirmed rejection on the 200 EMA, stop loss right here, just above kind of the 50 SMA or the previous swing high, which you could probably do up there, and we'll probably have to come down deeper than we were previously. But we don't need to be too greedy. We just need a risk-reward ratio above 1.5, so we could potentially find support in this range down here at 2.35 risk-reward ratio. Essentially what I'm saying is, if we were to go entering into a short position at, let's say, 59.90 with a stop loss at 60.1, we could then potentially take profit at 58.09 and make some pretty tidy profits with a reasonable amount of leverage, like 5 to 10x. Okay, we don't have to do 100 or 200x positions. All we need to do is trade actively every single day and look for 20-30% gains in our price action. Okay, and this is the potential here for XRP. Now, in terms of our structure, though, how does this change and adapt things? Well, we were tracking this idea of a 5-wave move to the downside, and it's possible that this overextended and became a very big 5-wave move to the downside. However, there's also this other consideration that we need to make. Maybe we didn't actually do a kind of 5-wave pattern, but maybe we completed a zigzag pattern. A zigzag essentially is a 5-3-5 pattern. Okay, and if we take a look at it from that perspective, we can see here that we have already kind of come down to our minimum expectations, but we haven't come down to the typical expectations between 57 and 56 cents. I don't think that's likely to happen, but it's something that we need to be kind of mindful of. Now, in terms of our structures, we know that this looks like a 5-wave movement, but doesn't meet the minimum requirements, of which, if we go ahead and measure this distance out here, so you can see right inside here, we didn't reach that 1.618 in this move to the downside. That means that this is not a 5-wave move under that kind of typical kind of structure. It would have to be considered something totally different and some kind of diagonal based pattern. If I draw in some trend lines here just to help you kind of depict what that looks like, you can kind of see it doesn't really contract or expand on the way to the downside, so it can't be either of those. It would have to kind of fall in line more with a I was going to say like a leading diagonal, but it can't even be that because that requires 1.618. So ultimately, it's going to have no other choice but to be labeled up W, X, Y, X, and Z, in my opinion. And that leads us into this correction to the downside, a little bit peculiar, but something to kind of consider here, which would have to also be a W, X, Y, X, and Z pattern, which would be, again, another kind of interesting structure, but it does fall right in line in here, like this. And of course, with this move to the upside, breaking all of that structure in a big reset, we can now look at this through the lens of maybe continuing a move to the downside on a bigger scale. Okay, so very interesting structure as XRP has kind of pulled back here, finding resistance and testing that lower trend line that we have drawn out here, as you can kind of see, and breaking it to the downside. So ultimately, I think resistances are still likely to be here, and we are likely to see rejection. If we take a look at our stochastic RSI, it's overbought on the hourly chart, so we are looking for rejection of that hourly 200 EMA, and we will be looking to short that market, in my opinion. Okay, so that's kind of where we sit on the hourly chart. It's not what we wanted to see. We wanted to kind of finish off a nice clean structure. We've bounced up a bit, but ultimately a death cross looming, resistance on the 200 EMA. We should expect further downside for the price action. Now, where is previous consolidations? Where are we likely to go? Well, we can see that this is a previous area of resistance coming in here, and it's also where we found support at the moment. Underneath that, there is this area right here. This one's coming in at 57.03 to 57.23. That could be an interesting point. If we lose the previous support area of 57.61 to 57.95, then we will be looking for the lower ranges of 57 cents. Losing all that, well, we are going to be retesting some of these existing areas. I'm not terribly too concerned unless, of course, we break down into a new lower low here on the 1 hour time frame, which would come in at around 56.07 cents. So we'll be a little bit cautious on that one, but for now we will adjust our trend line in line with the most recent swing low. Again, this is the problem with trend lines, they're subjective. A couple of touch points are good. You ideally want 3 though. So here we now have 2, and of course some people might use bodies of the candles rather than the candle wicks, and etc, etc. So subjective, but for the most part, as you can kind of see here, this is where we currently sit. We had the breakout, we had the breakdown, and yeah, it doesn't look like it's over just yet. We are of course still looking for 50 to 52 cents. That is on our daily time frame lows, where we're looking for this reset before we get into the next kind of run to the upside on the XRP price action. So if we roll this up into a daily time frame, we can talk about that because in here we are of course tracking this idea of a much bigger move to the upside, this Y wave up at 75 to 85 cents, right? This is something that we've been talking about for a little while now. It's not anything terribly too unusual. It's something that we do think is likely to occur in the same way that we were kind of tracking that high up here at 93 cents. It's not unusual. We didn't know how we were going to get there. We didn't know when we were going to get there, but we knew that we were going to complete that Y wave, and it was right up there at 93 cents. From there, we obviously short the market and take significant profit. Now here, of course, we're talking about going up to 75 to 85 cents. We don't know how we're going to get there. We don't know when we're going to get there, but we do know that where the price action is likely to go there before breaking down lower than 38 cents. Anything lower than 38 cents prevents us from following this structure up to 75 to 85. Okay, so on our daily time frame, what are we talking about? Well, we're talking about a quick correction down to that kind of 50 to 52 cents. Just down here in this yellow box range. This is a particular correction that sits inside of this bullish move to the upside. Okay, so we're looking for this bullish move to the upside, but it's going to have to first of all see a little bit of a drop before we get up into those higher ranges, right? We've been through this a couple of times. Nothing has really changed. The volatility that we see on the smaller time frames can be profitable if you're trading it, but ultimately for the most part, you know, it's just playing its course as a part of the bigger macro picture, which actually is holding up very, very well. So we are looking for 75 to 85 cents. Are we going to go there right away? Probably not. We are looking for corrections. We're seeing the stochastic RSI correcting down nicely on the daily time frame, so we are on track for this correction. Whether we go all the way down to 50 to 52 cents is unseen, but we do know is a minimum expectation that I have is going to be on the previous swing low, coming in at 54.52. That's going to be my minimum expectations. So we know that we could, of course, if we wanted to, on that idea, go short on the market, stop loss higher than the previous swing high, which would break structure. So we'd have to put that stop loss at 64.48 and take profit down here at that kind of lower range. We'd have to look for 1.5 on the risk reward ratio in this particular instance. So we would have to kind of see approximate take profit at 51.44. No guarantees of that, of course. So it is a slightly higher risk trade at the moment rather than kind of going short on the market when we had that swing high, which would have been a much more lucrative way of working, of course, because we would have had a tighter stop loss, which for risk reward ratio would have been above 6, and it would have been a fantastic place to be. Okay, so for the most part, XRP on the daily time frame is still on track for both the lows as well as the 75 to 85 cents. I know that sounds really contradictory to some people who just want to see price action go in one direction and one direction only, but actually all of these different time frames are interlinking together. We're looking for moves to the downside in order for us to continue the move to the upside. Depending on what time frame you're paying attention to, you're going to get different results. For example, the smaller time frame, the 1 hour time frame, we're expecting rejection on that 200 EMA, whereas on the daily time frame we're actually just progressing upwards towards our 75 to 85 cents target. They sound contradictory, but you actually work together in tandem to actually work towards your end goal. And if we roll this up into our weekly time frame, well, everything else is playing a part as well. We are currently just ranging between the highs and the lows, okay, while setting lower highs and lower lows, okay, on this weekly time frame. Our high range sits at 66 to 75 cents, and the low range sits between 33 and 46 cents. So all we're doing is basically hitting the lows and bouncing, and hitting the highs and dropping, right? And that's been the case pretty much since we kind of hit that high at 93 cents and tested this range up in November of 2023. We haven't really changed the market terribly too much. And that just shows you how stable XRP is, which is the whole point of XRP in the first place, to be highly liquid. A stable market like this is a highly liquid market, which is exactly what Ripple want for their cross-border payments. Okay, so it's very important to understand that XRP does not have to be $100, $10,000, $1 million. It doesn't have to be any specific price. Only thing it needs is to be highly liquid, meaning that they can move XRP from one place to another and liquidate it efficiently without much slippage / any slippage. And so what we're seeing here is exactly that, a very stable market. We're not seeing huge price swings to the upside or the downside. And that's exactly what XRP was designed to do. Okay, so do I think we're still going to see a significant volatility? Yes, I still think we're going to be pushing up to 559 to 1125, and I do think this is going to be due to increased demand, which we don't really see at the minute. The reason that this is highly liquid is we haven't really got any new participants. All we've really got are the existing players in the field. Okay, and what we're going to have in 2025 is new players coming in, swarming the field, in fact, and it's going to basically create an imbalance between the supply and the demand. So I do think we're likely to see a surge up to 559 to 1125. That's where my 2025 price prediction for XRP is really going to be sitting, in my opinion. But of course, these are just my thoughts and opinions on the data in the charts as I personally see it. But what are yours? Let me know in the comments down below, or join us in our free Discord server linked in the description. We would love to hear from you. And guys, if you haven't done so yet, check out my second channel just here, where I go through the Cardano technical analysis every single day.